Traders, be honest. Have you spent more time tweaking your CCI indicator color, thickness, look-back period than actually testing it if it works? You are not alone. But the hard truth, I've done thousands of tests on this indicator, and out of all these tests, only few passed robustness testing. So let me show you why blindly copying CCI setups from YouTube videos or articles might be killing your edge. CCI, the Commodity Channel Index, is an oscillator that measures the price deviation from a moving average. When the oscillator is above 100, things are very good, strong, trending up. When the price is below minus 100, things are not good, price are trending down. Most traders use CCI to time entries as a trend following or for reversals. But here is the problem. Almost no one tests if the market works with this type of oscillator. This is counterintuitive to whatever you see on YouTube, because I usually start from an edge rather than the whatever indicator you want to throw in. And by the end of this video, you will see the huge difference between these two workflows. Here is the CCI indicator on a chart. And first of all, you need to double click and change the length to 23 and change the source to high plus low divided by 2. And then we go to style, change the color, green, and make the thickness as 4. And now you draw a trend line, taking the market structure into consideration. And also, we want to put the low of the last period. So this one. So when they both intersect and the CCI is below minus 100, we place our order at the breakout, and then we place our stop below the lowest low, and we take a 3-to-1 market, and voila, you hit your target. I just wanted to show you that I can do all that stuff, but of course, you know that's BS. The market does not care where your order is, and if you want 3-to-1 target or 2-to-1 or 1-to-1 or 10-to-1. Instead, the real way to build a strategy using any indicator you like is first to find an edge, and then you want to match it with that indicator. Now, for the regular viewers, they think that I'm going to bring the S&P now, which I usually do because it's so popular, it's very liquid, and there are a million derivatives on it. But in this case, I'm going to pick something that bring both people in from Forex and futures. So I'm going to pick the British Pound Futures. So British Pound Futures is based on the USD British Pound Forex pair. So this is the daily bar of the British Pound Futures. And of course, it's up and down. Sometimes it trends, sometimes it doesn't. And I'm sure you have access to charts that you can see that there is no single direction in this market. But I recently did a video on the one metric that rules them all. And basically, this metric measures the maximum profit that you can make if you traded the market perfectly. And one of the members in the community asked me that, long and short are different. This is how the indicator looks like. Basically, if you traded the market perfectly, meaning you buy every low, you sell every high, and then you short every high, you buy the next low, and so on and so forth. And using that indicator, I exported a lot of instruments, perfect market. And here at the top is the result of the indicator applied to the British Pound Futures, which is the USD British Pound Forex pair. So the data is about 18 years, and we can see that we have almost the exact number of pivots on the short and long side. So look at this. Long side is 125, short side is 125. That means we have 125 long trades and 124 short trades. And if we trade them perfectly, we will make about $450,000. And if we annualize this, because you have to annualize it in order to match it to the number of years with other instrument, we can see that they are not far apart. So 11,000 on the long side, 11,000 on the short side. Now, why I'm showing you all this? Just to show you that British pound, if you zoom out, it's a forex pair that goes nowhere. It goes up and down most of the time. Sometimes it trends, sometimes it's not. And there is no clear edge from this test. But in my Algo versus Crab series, I accumulated a database of strategies tested using different speeds on multiple markets. You can watch that series, is highly recommended. In this database, I have about 72,000 strategies, 1,100 done on British pound futures. And out of those 1,100, only 26 are robust. So out of 72,000 tests that I did on these markets, 1,100 were done on British pound using 23 indicators. They're all using same speed, same exit, so we can easily compare them. And out of those 1,100, only 26 strategies passed a minimum robustness test, meaning good number of trades, good average trade, higher return to drawdown, and so on and so forth. But here comes the most important part. We can see out of the 23 indicators tested, not all of them produce good results. And in fact, CCI has only one strategy. And the best indicator is the RSI for this instrument. Remember, all these indicators using same speed, meaning they produce same amount of trades at every speed and using same exits. But here is what I want to bring your attention to. So out of the 26 strategies, 16 of them are mean reversion, 10 of them are breakout, 24 of them short side, and 2 long. So this is not a fluke. This market tends to work very well with the short side than the long side. 24 short strategies, randomly selected from all these indicators that passed a robustness test, work on the short side. Only 2 work on the long side. So now I am armed with this knowledge. I can easily use the CCI indicator to come up with a profitable strategy on this instrument. So here we are in strategy Quant X. I will show you the test in Builder. So I'm using TradeStation Engine with B6.D. This is the daily session of the British pound futures using daily bars. I'm using simple strategy and we will switch to the short side. Remember, the data shows us that this instrument work really well on the short side, both mean reversion and breakout. So let's save this. I will ask for one condition for entry and exit, and global indicators 5 to 400, 3 and 3 for the look back shift and the number of exits. Now I will not ask for a stop loss or a profit target. Then we go to data, and I have here data from 2006 all the way to middle of May 2025. Trading option, nothing is picked. In building blocks, I only pick the CCI. You see I have only 8 blocks selected. 0 here, and here these are only for, if we use the stop market order, we will use these. But for market entry, these will not be used. Also notice I am not interested in the look back period. Of course, these will all be randomized, so if we click on any of them, for example, let's say this one, CCI crosses above a level. If we click on custom, go to parameters values, you can see that this will be randomized between the minimum and maximum period. And this minimum and maximum period is what we picked here. So this is the minimum, which is 5, the maximum, which is 400. So all these will be randomized, so I'm covering a lot. And exit types, it's not required, but I did use exit after bars or trailing stop. We're entering at market. I'm only using a fixed contract. There is no cross-check. And in rankings, I'm going to store 5,000 strategies. and I'm requiring these conditions: 100 trades, 1.3 profit factor, return to drawdown 4. What I'm showing you is a really simple ask from my side. Only 1.3 profit factor for return to drawdown, 100 trades for the past, whatever, 18 years, and randomize the CCI blocks. So we're not adding any other condition. It has to be one condition, and it has to be a CCI block. And remember, I asked it for 5,000 strategies, and we will watch this in real time. So start. It's generating. It already came up with strategies. So we're almost close to 1,000. I'll stop it now. So 1,000, that's below 1 minute. So below 1 minute, we got 1,000 strategies and net profit from 80,000 to 37,000. Let me pick net profit and let's see what this strategy looks like. So we go to source code and we have exit after bars and CCI period. That's it. The short entry is the CCI of this period, which is 20, higher than minus 75. We enter and our exit is 10 bars. Let's go to the next one. This is the CCI of 30 look back period crosses 0 upward. Next one, CCI of 20 crosses minus 95 upwards, trailing stop of 100 pips. Because our foundation is correct, which we know that the British pound tends to work really well with short strategies. That is not because the British pound is drifting lower all the time, because I got this comment on my S&P edge, which somebody said in the comment that, well, you know, the S&P is drifting up all the time. Yes, but that doesn't mean the S&P is going up all the time. It's drifting up, but it's going through a lot of drawdowns. And in fact, the biggest drawdown is from 2000 to 2014. Anyway, we are on British pound. I just showed you in the beginning that the British pound is not drifting downwards. In fact, it's up and down. And when I tested with my perfect profit indicator, I showed you that same number of pivots almost exist on the long and short side. But through the other test, which is the Algo versus Scrap series, we know that it works really well on the short side. And that's why we can easily get 1,000 strategies within a minute on the short side. They're all performing really well. And they're all using a simple one entry and a simple exit, either a trailing stop or exit after number of bars. Now let's try the long side. So now let's clear all this database, go back to progress and what to build. And now we will build the long side. So long only, I will change nothing. Everything is still the same. Change nothing. Ranking is the same. And now let's test the long side. So we already passed 1 minute and there are no strategies yet. So after 2 minutes, we have one strategy and I'm going to stop it now. And let's look at the strategy. So it's going along with the period of 14. So when the CCI crosses 0 upwards, look back of 14 and trailing stop of 80 pips. So you see that 2 minutes for one strategy on the long side and 1 minute for 1,000 strategies on the short side, using exactly the same setup, same instrument, same data, same everything. And that is the power of starting with the right foundation. What I'm trying to say is the indicator doesn't matter. The look back, all this garbage doesn't matter. I mean, it does matter on the right instrument. So on the right instrument, now I can pick and choose my look back period. I can actually build a portfolio of CCI indicator strategies on the short side on British pound. But I can also build a portfolio using RSI, using Ultimate C, using KCC percent, using close after close, using any other trigger. And I will get a different variations of strategies, all shorting the British pound, and they will all be robust. Just imagine, out of 1,000, it will be very easy for me to pick a robust area using the CCI indicator. While on the long side, I will have a hard time finding a robust strategy using any indicator, not only the CCI. Let's go back to the short side. And now we will use a breakout strategies also. So when using the stop, remember we will use the other blocks here. And this theoretically should give us more strategies, more different strategies, because you're using a different entry now. So let's test and see what we get. So as expected, in a minute, we got about 1800 strategies. So it's almost double. And let's sort and see what we get. So here is a strategy that's using the breakout. So you can see now we have an ATR period, which is most likely used for the entry. And as expected here, you see we are entering at the daily high plus a multiplier of ATR on a stop order. Now remember, these strategies will not be the same. Like, look at this. This is a breakout at 97 trades. And this is, it's almost mirror version, I would say, at 156 trades. Here we have 200 trades. Here we have 57 trades. This is what algo trading is. This is what I teach in my algo trading masterclass. You start from an edge and you build on it. If you like this video, then you will love the next one.